Good morning, everyone. Thanks for joining us today. We've got Akiba Leisman, CEO of Mako Mining, who's going to provide an update. And Akiba, why don't you get started?
All right. Well, hello, everybody. I can't see who the participants are, so I'll assume that most people haven't heard the story before. And then we'll go over what we're doing right now in northern Nicaragua, as well as how we're handling this global crisis right now with respect to COVID-19. So let me introduce you to myself and Mako. My name is Akiba Leisman. I am the CEO of Mako Mining Corp. And we are in the middle of doing a few things in Nicaragua. We are building what will be the highest grade open pit only mine in the world. We are about 60% done with building initially a 500 ton per day plant. We actually started mining the deposit in February, and then because of some of the logistics issues because of the virus, we suspended mining operations about a week ago, and we're planning on restarting mining over the course of the next couple of months. But construction of our 500 ton per day plant is continuing. We were just on the call with our country manager, so we're getting our two 500 ton per day ball mills that we purchased on the secondary market delivered to our site sometime this week. So when our plant gets up and running in Q4 of this year, assuming that we don't have any additional COVID-related logistical issues across the rest of the year, we will start producing at a 500 ton per day clip what will be the highest grade open pit mine in the world. Now, additionally, we've embarked on a very aggressive exploration program. We had 4 rigs running on our property, and we did make a discovery about 4 kilometers to the south of our San Albino mine that we're currently building, an area called Las Conchitas. And the objective of Las Conchitas is to use these exploration results to block out an initial resource, develop it into a mineable resource with the idea that we are going to double production at 1,000 tons a day sometime in the year 2022. So also with respect to the virus, we limited our exploration drill rigs from 4 to 2. So the pace that we have been putting out news on some pretty extraordinary open pitable drill results over the course of the last year, that pace will slow somewhat, but we still are actively and aggressively trying to block out a mineable resource with the objective of expanding our plant and operations to 1,000 tons a day over the course of the next couple of years. And we're well on the path to do that. And finally, which is probably the most important thing, is that we are sitting on what we think is a world-scale orogenic gold mining system. And really, for some quirks in history, this was the first time that a land package was put together in this contiguous basis. Currently, we have 150 square kilometers of ground under our belt. And over the course of the next few weeks, we anticipate announcing the expansion of that ground through some concessions that we've asked the government to grant us to. And we're in the very late stages of having those granted to us. So we do have a large-scale orogenic system under our belt that is 100% owned by Mako. And the objective is that once the mine is up and running, we will have the cash flow to start really for the first time in history to explore the broader land package that we currently have. Now, I used to work for the controlling shareholder of Mako, which is a private equity and hedge fund group called Wexford Capital. Wexford is a multi-billion-dollar private equity and hedge fund group. They own approximately 56% of the outstanding stock in Mako, so they are a controlling shareholder in every sense of the word. And normally when I talk to investors, there are concerns about having a shareholder of such that is in the background of a company like Mako. I can state emphatically and without hesitation that if it was not for Wexford, this company would not be advanced to the level that it is right now. So this is one of the big dichotomies that we see in the junior investing space, is that there always seems to be a concern about having real money investors backing companies such as this, when the alternative is to have a lot of these junior mining companies without the financial resources or without the disciplined management to take these projects into fruition. And with that, Wexford does put their money where their mouth is that back in July of last year, they backstopped a Canadian $27 million rights offering, so about US $20 million, to fund the majority of the capital required to build the project. And all of that money has gone into constructing what is a 60% complete 500 ton per day facility. And then the top off financing, the US $15 million to complete the project, as well as to deal with certain remaining liabilities at the company, was financed over the course of the last 6 weeks. So we've drawn down US $5 million of that $15 million unsecured term loan from Wexford. And we're going to be drawing down an additional US $5 million over the course of the next week, with the final $5 million requirement coming in sometime in the early part of the summer to complete the project. Now, a little bit about the company and the capital structure. We have 583 million shares outstanding. The share structure expanded by 80% as part of that rights offering that was done in July. So all previous investors did have an opportunity to participate in the rights offering. Myself and my colleague went out into the market to purchase over 6 million shares of stock in and around that time. I have been in the market buying, I think, 750,000 shares additional over the course of the last few weeks as well, to show you that we do believe that this company is grossly undervalued, and the stewardship of ourselves and Wexford seeing to this project come to fruition, it's clear in our desire to invest and reinvest in this company going forward. Our second largest shareholder is a group and a person named Paul Stevens. So personally, and through a small hedge fund that he manages, he owns somewhere between 6 and 7% of the outstanding stock of the company. A little bit about Paul. He founded a very well-known boutique tech and biotech investment house out in San Francisco called Robertson Stevens. That was sold to Bank of America in 1997. And he's been a resource investor really throughout since the 1980s. So even though his background is in technology, he is a very astute resources investor as well. And he's become one of our most supportive shareholders. So his 40 to 50 million shares thereabouts that he owns right now, all of that was, or the vast majority of which was purchased in the open market. And I speak to him every week, and he's a really good, wise individual to be making strategic decisions on how we're moving this company going forward. The debt that sits on the balance sheet right now, it's notionally $15 million, but only 5 of that has been drawn. So our balance sheet is a lot less levered than what it says on the slide. And with some very disciplined spending, the remaining $10 million that we need to draw on that loan is just about sufficient to complete the project. If there's going to be a $1 or $2 million overrun on the project because of delays related to the virus, that is okay. We do have a supportive shareholder with a lot of financial resources to make sure that this project gets delivered as quickly as possible and as safely as possible going forward. So a little bit about our operating team. So myself and Cesar Gonzalez, who's also on the line, used to work for Wexford. We created a predecessor company to Mako called Marlin Gold Mining, and we facilitated a merger with the the predecessor of Mako called Golden Rain, which owned the San Albino project back at the end of 2018. Jesse, who's our Chief Operating Officer, we've worked with and have known for the last 10 years. So he is a very, very good hands-on operator. He and his family used to own and operate a small-scale engineering, procurement, and construction management firm that had about 15 key people associated with that group. The vast majority of those people have been onboarded as employees to Mako, and he's running the day-to-day operations. Actually, in quarantine, just like me, but we do have some on-the-ground supervisors that are taking Jesse's day-to-day direction, and we plan to have Jesse on site as soon as it's feasible to get bodies on the ground going forward. Now, a little bit about some of the drill results that we've put out over the course of the last year or so, and even some of the history behind the company itself. Back when this was owned by Golden Rain and prior to Wexford taking full control of this asset, a lot of the geology was known about San Albino, but there really was not a desire to go and invest in exploration. And I don't like to look backwards, but there were some disagreements on management style, directorial oversight of the company that have since been rectified. But even though the company that was owning and operating this asset knew what they had was special, the objective really was to get the mine up and running with as little money as possible, and to ignore, for lack of a better word, a lot of these extraordinary exploration results that were hit over the course of the last 11 or 12 years. So one of my favorite anecdotes about the recent history of this company is that the previous CEO quit in just over a year ago, in March of last year. And just a few hours after I took over initially as interim CEO and eventually as full-time CEO back in August, we were going through the data and we saw that there was this hit that was hit in 2011. It's a 3-meter intersection of 2-ounce material about 30 meters from surface over at that Las Conchitas exploration satellite area that we had to the south of our known resource and the mine that was being developed. There was not a single drill hole that was followed up on that hit, where a normal mining company that could build a multi-$100-million valuation just on the back of that hole. So the very first thing that happened after we had a chance to have a cursory view of the information, once that previous management left and we had kind of everybody swimming in the same direction, was to commission a drill program over at Las Conchitas. The very first hole that we hit, which was 2 months after I took over as interim CEO, hit 13-ounce material 35 meters from surface. That's at 376 grams per ton gold over 1 meter. This is an open pittable part of the deposit. This is a shallow lying structure. Very limited pre-strip needs to be taken out in this particular area. And it was just ignored for a period of 8 years because of a fundamental disagreement on how a project and how a company should be managed. So luckily, previous management is no longer with us. Luckily, some of the directorial oversight of the predecessor company is no longer there. And we're able to manage this company appropriately, prudently, and when there are real, good, high-return investment projects to be investing in, there is a shareholder that's capable of funding it, even if the financial markets are not there to support our endeavors. So it really isn't an envious position for a company such as Mako to be having all of these elements, which key and very competent operators mixed with people with financial abilities and resources to go and move this project forward. But take a look at some of the other hits that we've had, both in Las Conchitas as well as the 20,000 meter infill program that we have over at San Albino. I mean, these truly are extraordinary. So we put out a some drill results last week where we hit 84 gram material over 1.6 meters. This was a series of 2 press releases where we had 8 different intersections. All of them were grading in excess of 23 gram material. So you have ounce hits over 3 meters. About 90% of that is true width. So this is close to 3 meters true width of an ounce material in an open pit area of the mine that is not part of the known 1 million ounce resource that we have on the books today. So all of this is stuff that we can go block out with a drill program in this Bayacun area of Las Conchitas. And then by sometime next year, we'll have a maiden resource on it. And then by sometime in 2022, we'll be using these satellite areas to supplement our 500 ton per day operation to expand it to 1,000 tons a day, all organically financed with the cash flows that are going to be coming from the mine when it turns on in late Q4 of this year. And then some of the other hits that we've had. You have an infill hole of 47 grams. That's an ounce and a half material, 2 meters true width, 13 meters from surface. This is 2 benches from surface. We have 60 gram material over 2.1 meters estimated true width, 5 meters from surface. That's within the first mining bench from surface that we're having 2 ounce material over mineable widths. I struggle to find any project in the world today that has these kinds of grades that are amenable to open pit mining. So when people kind of compare us to our peer group out there, we actually struggle to find good analogs in terms of mining projects that exist within the major mining portfolios or our peer group within the junior mining community that have projects that even remotely compare to some of the results that we've put out over the course of the last year. So a little bit about San Albino. So there's kind of like an interesting history behind the project itself. So we are located in Nicaragua. Nicaragua is a safe jurisdiction. So we're in the process of closing down and reclaiming a mine in Mexico, which is not a safe jurisdiction. There are currently, I should say, as of last week, there were 3 operating commercial mines in Nicaragua. 2 of those mines that are owned by Calibre have decided to temporarily close down because the logistics became too difficult for them to manage around the virus. We have taken a decision to greatly streamline our employees, our use of contractors, and our management of the asset to make sure that almost exclusively it's being managed by local contractors to limit the back and forth between, certainly outside of Nicaragua into Nicaragua, but also within Nicaragua, Managua, Esteli, and some of the other large cities to and from the mine, to limit the risk to our employees associated with this. But we do have commitments to the government. We have commitments to our shareholders to see this project going forward. And we have every intent to continue operating even as the virus inevitably takes hold in Nicaragua, just like it will everywhere around the world. We just have to adapt to the new environment. Now, elsewhere in Nicaragua, the government is very supportive of this project. We had a little logistical snafu where our secondhand mill that we purchased from the United States was stuck in Honduras at the border of Nicaragua for way too long of a period of time. We have direct access to the various mining ministries, so those snafus can be resolved pretty easily. So we have direct access to the government. Everybody from the president on down knows about this project and are highly supportive and making sure that this becomes Nicaragua's next, and unless some of the other mines turn back on, potentially even only commercial operation within the country. So this has become a key area of importance for the government to see that this mine goes through. Now, a little bit of a history of the project, because it is kind of an interesting quirk of history on how this came about. The last time that San Albino was up and running was in 1926. It was a U.S. businessman named Charles Butters. He opened up the operation, and one of his employees, a clerk and general manager of the mine, 6 weeks into the mine's operation, decided to hijack the mine, steal all the gold, and then use the gold to finance the original Nicaraguan revolution. And his name was Augusto Sandino. And for those that don't know about Augusto Sandino, he's the namesake of the Sandinistas. So there was a huge civil war from the late 1970s to the late 1980s in Nicaragua, the Sandinistas and the Contras. The namesake of the Sandinistas came from Augusto Sandino, the general manager of the San Albino mine in the mid to late 1920s. So if you fly down to Managua, it's the General Augusto Sandino International Airport. He is a folk legend in the country. Whether you are an FSLN, the new Sandinista government, the powerful political party in Nicaragua, or if you are part of the opposition, everybody views Sandino as their folk legend. He's like a Johnny Appleseed or somewhere along those lines in terms of how people view them, like a George Washington almost in Nicaragua. Now, because of this, there's a few things from a political point of view where everybody is really excited to get this mine that has this rich history coming about. There are some also practical reasons why this becomes important. Is that after Sandino was lured back into Managua and assassinated by the Somoza regime in the early 1930s, this project went back into government hands, and then for a whole variety of reasons, nobody ever bothered to put the land package together or explore it, and certainly not produce anything more than sporadic artisanal mining, really from the early 1930s up until when our predecessor company picked it up in the mid part of the 2000s, about 15 years ago. So in doing that, it was basically put into a time capsule where very little exploration work was done on the project. And that's why you see these multi-ounce intercepts that are sitting right at surface are still there. This has been a mining area that's been known about since Spanish times in the 18th century. And normally anywhere around the world, you see those types of grades that you can access through an open pit, they would be gone. So if it wasn't for this quirk of history, we wouldn't have the land package that we have. We wouldn't have the near surface gold that we would be able to start the project off of. And we also would not be able to have the regional scale land package that we have if it wasn't for the fact that this project was put in a time capsule for this very weird quirk of history from the 1920s to the 1930s. Last time that there was public economics that were put on this project was 2015. I kind of alluded to earlier, we did not see eye to eye with previous management or the board of the company. So there's a lot of things that we did do to help on this PEA, and there's a lot of things that we did not do that we pretty vociferously disagree with some of these results. So we did have a lot of input on the initial CapEx of the project. So a lot of the basic engineering was done on a PEA level with our support and help, because we've been involved with the project since 2014. So we'll highlight that number where the upfront CapEx on the project is $21.1 million as part of this PEA. There were a few material scope changes to the project over the last couple of years to make it more environmentally friendly and safe. We put in a filtered tailings and dry stack storage component to our mine, top of the line in terms of environmental safety and security. And that basically was the main culprit of increasing that upfront CapEx from 21.1 to an apples to apples basis to about $25.5 million. Now, on top of that, it was clear that when we took control of this company back in March of last year, that there were a lot of gaps and deficiencies in the resource model. And then our initial first pass we were kind of incorporating some of the previous drilling that was not incorporated, so post 2015 drilling into this resource model. It was not being modeled professionally, I think is a reasonable critique on how this was put together. It was basically a resource model that was intended to goose investors or mining companies into thinking that this was a larger project than it really was, at least with respect to the data that was had at the time itself. Now, in incorporating some of the 2016 and 2018 drill results that we had, we redid the model. I think we've actually hired a third-party engineer to come up with an updated resource estimate that will be out sometime this calendar year. But the Cliff Notes version of how things changed is that this is a much more structurally controlled deposit than what was being modeled before. Higher grade, but at least in terms of the data that existed before, a somewhat lower ton than was the case. So from our first pass on how we're looking at it, there really wasn't all that much of a difference in terms of ounces in the ground, but it is a higher grade deposit than what was being modeled before, albeit lower tons. So that has a few practical implications for how the project's being developed. In order for you to open pit a mine like this with relatively narrow structures, because this is a narrow vein quartz-hosted coarse gold deposit, so you do have to be cognizant on how to mine that carefully, is that we do have the ability to selectively mine this, and you have to be very, very careful on how you do that. But also the grade of the deposit is higher than what was being purported in this PEA. So we're pretty confident that the in situ grade of this deposit will be in excess of 10 grams a ton. And then we will be taking some mining dilution associated with this. So I tend to state publicly that my personal expectations will be a diluted head grade of about 9 grams a ton when all is said and done. That could be a little bit lower. It could be a little bit higher. We do want to have some mining under our belt before we actually have a firm guidance on what the average head grade is going to look like. But those are some reasonable numbers. Now, what that actually means from a production standpoint is that if this is about 9 grams at our expected recoveries and a 500 ton per day throughput, that equates to a high 40,000 ounce a year run rate of production. And with an all-in sustaining cost, inclusive of royalties, tax payments to the government, sustaining capital, everything associated with the project itself, will have all-in sustaining costs at these gold prices of right around US $500 an ounce. Now, if the grades are somewhat higher, all-in costs will go lower and production of gold will go somewhat higher. Likewise, if we're not able to control dilution as much as we expect, then costs would go commensurately higher and production somewhat lower at that same throughput because of the grade differential of the deposit itself. Now, a few interesting aspects of the resource model. This is a very, very well-behaved deposit. So this is not like a high-grade system that you would experience using, I don't want to pick on them, but using, let's say, Pretium as an example, where if you look at geostatistically on how their model up at Brucejack was run, it was a really, really difficult mine to model from a geostatistical perspective. Ours, for what it is, all of the data really is very well behaved. It does look like a log normal distribution of assays when you model this. And some of our geostatisticians that we put on this are astonished by just how well behaved the data actually is. So even though we do have a coarse gold deposit, we're able to model grade pretty effectively, both where zones of high grade are located, how we're going to be mining it, putting in the plan itself. So we're very comfortable that these high grades are going to be maintained throughout the life of the mine without too many deviations from our initial estimates. Now, where we stand in the cost curve versus some of the other mines that are out there, grade is everything. If you have an open pit mine that's delivering a single digit or very low double digit strip ratio with a 9 gram a ton diluted head grade, you will be almost by definition the lowest or one of the lowest cost mines on the planet. So this is an illustrative chart, a graph of some of our what I would call somewhat competitors with respect to grade and the return on the projects themselves. But we really are off the charts when it comes to open pit only mines around the world. So again, our expected head grade will be right around, diluted head grade will be right around 9 grams a ton. And these are some of the highest grade open pit mines that we can find anywhere around the world that's in production now. They have half the grade that we are. Now, granted, these are larger scale operations. There's a lot of operational synergies associated with these that will make this a relatively lower cost by unit, by ton of material that's being moved. But just to put in perspective, if we're running this open pit with a 9 gram diluted head grade, we will be not only comparable, but probably lower in terms of C1 cash costs relative to some of these deposits out there, which means that even though we're going to be producing in the high 40,000 ounce a year rate initially, but again, our expectations are that we're going to be doubling production by 2022, the margins of those ounces will be so far off the charts for any one of our peers that the cash flow coming from that will truly be astounding, especially relative to the valuation that we trade at today. So a little bit about the exploration that we have, the potential that we have, as well as some of the upside. So we have put together what's now about 150 square kilometer land package. Cross our fingers. We hope to announce the expansion of this land up to the northwest part of that diagram that you see on your screens imminently. So let's say over the month of April, we hope to announce that. And we currently sit on 23 kilometers of strike. So the strike goes into the direction of the text that you see on this slide. And all of that strike is mineralized. So there are gold showings, there are rock chip samples. We do not have broad geochemistry soil samples across our property, but individual prospecting, exploration pits, rock chip samples across the full 23 kilometers of strike shows that the entire district is mineralized. That's not the same thing as saying that there's 23 kilometers of a economic open pit mine. So don't confuse what I'm saying. But what it does show is the potential for this orogenic system to be world scale in nature. And frankly, the gold goes off our property in either direction, to government owned ground, to the northwest, to the southwest, as well as to the northeast. So the mine that we're currently building right now, that we're about 60% complete over at San Albino, is that square with that arrow that's pointing to the miner's pick and shovel. So that's where our initial open pit mine is going to be. We're about 60% complete building our 500 ton per day plant. We actually started mining in February, but then we had to suspend mining temporarily about a week ago because we really did want to limit the amount of people that were at our site to control the spread of COVID. Our exploration asset at Las Conchitas, directly to the south, is just a couple of kilometers as the crow flies from there. So if we're able to prove out a mineable resource over at Las Conchitas, you just have to build a 2-kilometer road to link up to the southern part of our mining infrastructure over at San Albino, and then that can be easily trucked to what will be an expanded 1,000-ton-a-day plant to the northeast of that square over at San Albino. In December of last year, Mako purchased a concession from another publicly traded company called Condor Gold, the Puerto Rios deposit. So they had 12 or 15 square kilometers of ground directly on strike to the San Albino vein. We can say emphatically that the San Albino vein goes on the other side of the El Jicaro River, that blue line that you see over there. So while there really isn't any drill information over at Puerto Rios, from a prospecting perspective, a trenching perspective, and just a visual inspection that the vein continues, we are 100% convinced that the strike of the San Albino vein goes on to the Puerto Rios deposit. And frankly, the strike of the mineralization continues to the ground that we already owned in that red section of our land package, just to show you the nature, the consistency, and the potential for this deposit to prove up to something that will be world scale in nature. Every single one of these dots on this screen is a prospecting sample, so rock chips, a little bit of soils, exploration pits, things of the sort, some historical workings. Every single one of those red mules that you see on this this page is a sample grading in excess of a gram. So you can see with actual data, the full 23 kilometers is mineralized. And again, don't confuse that with a 23-kilometer mine, but our interpretation of this is that there's a high degree of potential for us to find additional economic deposits across our land package. Now, as the crow flies, where Las Conchitas is, so I'm now a bird looking at the site from the air. You can see San Albino. That's the open pit mine that we're building right now, all the way in the northeast, tucked away on the west side of that river, albeit on a 40-meter platform from the ground, is where our plant is being built up on the northeast side over there. All of our footings for our plant are being designed for 1,000 tons a day. So our crusher is capable of handling at least 1,500 tons a day. We're building, or we have built 5 carbon and leach tanks, but we have the footings for 10 of them to expand to production. We bought 2 individual 500-ton per day ball mills that theoretically will be at our site this week, depending on when the customs department actually releases it. And then we're well on our way to having the groundworks for a 1,000-ton per day facility, even though the current infrastructure is there to support 500 tons per day. Or I should say the current equipment, the infrastructure is there to support 1,000 tons a day. Las Conchitas, with all those explosive drill results that you saw before, is really 2 kilometers away from the north part of Las Conchitas to the south part of San Albino. And then the area with that 80-gram intercept is on the southern part of Las Conchitas over here. So this just happens to be the most advanced satellite area that we have on our property, but by no means is this the only area of potential economic mineralization that we have over at our 150, soon to be close to 200 square kilometer land package. Now, the reason why this project becomes so special is because of the nature of the ore body itself, is that geologically speaking, narrow vein, quartz-hosted, orogenic ore bodies, I can name 20 of them around the world. And frankly, a lot of them look better than ours, purely from a geological standpoint. And what I mean by that is that if you have these quartz veins, there's plenty of analogs around the world where you can have ounce type grades in the system itself. And then you have a lower grade footwall and hanging wall to that vein that dilutes it down to the 20, 25 gram area. And then for ours, if you're looking in the vein, you're probably getting something about 15 or 16 grams within the vein itself. And then your footwall and hanging wall will dilute that down to 10, 11, 12 grams, somewhere thereabouts. But the difference between our deposit and most, if not all, of our closest analogs is that those tend to be vertical structures where they basically have these orogenic systems. And orogenic from a practical perspective, what that means is that you tend not to have grade zonations like you do with epithermal deposits. So the grade that you have on top is basically the same as the grade that you have down below. And the dip potential for these types of systems really go on, practically speaking, forever. So these vertical ore bodies, they'll have veins that go to the center of the earth. Obviously, that's a little bit of an exaggeration, but that's different than an epithermal deposit where you tend to have these zones where your economic mineralization is, where your gold and silver is hosted, where your grades are economic. Here in an orogenic system, you have grade throughout, and then you have dip potential that can last kilometers. The difference between our project and theirs is that we have flat-lying structures. And what makes this special and unlike any other project that we are aware of globally is the ability to access these types of structures through an open pit mining scenario. So you can start a project like this up and running with US $30 million and not with hundreds of millions, if not billions of dollars to do the underground development and infrastructure build out before you're going to see first gold pour. And we have the ability to expand by going after the veins that you see on the left, which is our primary San Albino mine, those 4 veins that we're going to be taking out, and then Los Conchitas, which are additional shallow lying, open pittable, high grade, quartz hosted gold that can be open pitted and trucked to the infrastructure that we'll be building. And our expectation is that we're going to find multiple mines across our 23 kilometer land package when all is said and done. So with that, I'll open it up to questions. Feel free to ask me anything about what we're doing operationally. Obviously, this is just to put this in perspective. This industry has not gone through a purely a logistical crisis like this, certainly not in my career, and I can't even think of one historically other than through the shutdowns of the mines because of World War II on the gold side of things. Financially, the industry has been through a lot of difficult patches over the course of the last 80 years, but logistically and operationally, I've never seen the logistics of building a mining project this stressed, this difficult, and we're taking the approach that we have very skilled operators. We're trying to be as safe as possible as on the build out of the mine itself. So we're taking prudent precautions, which has effectively delayed our first production from late Q3 into Q4 of this year because we have a much smaller staff right now. But we're going to have to be managing through this crisis really for the foreseeable future. This is not a temporary situation. The virus will be with us for years. It is endemic to the globe right now, and until we have effective treatments and vaccines, or there's enough antibodies floating around in the world population, this is going to be something that we're going to have to be dealing with, not for a short period of time, but for really the foreseeable future. So there's going to be a very clear-cut differentiation between real companies that are able to operate through this crisis and fake ones that really just don't have a business plan to operate in a very challenging environment such as this. And I can emphatically say we are part of the former category and not the latter. So with that, I'll open it up to any questions that you might have.
When do you expect to have commercial production? And is funding in the bank now to cover that all needs and cash flow until production?
So the way that I described the $15 million completion loan when it was received was that even that US $15 million number, so before the operational challenges became evident, I described that number as a breath-holding and belt-tightening type number. So it was not designed to have a comfortable buffer on the company's balance sheet, right? So there's no question that at a minimum the project is 2 months at a minimum, and it could potentially be as much as 4 months delayed relative to where we are before we adjusted our operations from just over 400 employees to just under 250 employees, from effectively eliminating all outside of local contractors at the site to limit people coming back and forth. It does slow things down. So I think there's a reasonable expectation that there will be a small requirement, but we were running slightly under budget before. It's not going to be a major number. I don't foresee any overrun being in excess of a couple $1 million maximum, and we're going to do everything that we can to try to keep within that $15 million requirement. And if we can, fantastic. If we do need to expand the loan by a couple $1 million, one of the good things about having a shareholder with financial resources that's supportive for this country, for this company, is that we have the ability to fund overruns because of unforeseen events or just challenges like we're experiencing with respect to COVID. So company is tight, but it's not outrageously so. Oh, and then with respect to commercial production, on that question, I think we're announcing first production in Q4. I actually just had a conversation with our COO right before this call. Is that if you asked me before the virus, I would say there's really no reason to have a ramp up schedule. You basically start going full on 500 tons per day as soon as the mine turns on. In fact, one of the reasons why we were developing a stockpile was to have enough flexibility for that when the plant does turn on. I told them is that we probably could envision a ramp up mode over a few months a period for a couple of reasons. One, because mining was temporarily suspended, so our mining contractor can focus on both building the project as well as being a supplemental management for our on-site local contractors that are essentially there managing the day-to-day at this point. Because that stockpile is now going to be smaller, it does reduce some flexibility. So I think there's a higher probability of there being a small ramp up period of a few months. So we're not ready to actually give guidance on the exact quarter that we'll do commercial production, but I think a reasonable investor can assume that if we're going to be starting production in Q4, that commercial production would be at least a quarter after that.
For anyone that's not sure how to ask a question that's online, there's a Q&A button at the bottom that you can hit and type a question in. Or if you want to use the chat, we'll see it there. If there's no other Q&A, Akiba, is there anything else that you wanted to touch on?
Yeah, I just wanted to hit home is that I get a little bit triggered when I see some mining companies put out temporary shutdowns, temporary closures, things of the sort, as if the virus is temporary. This I do want to hit home is that this is going to be with us for years. The CEO of the company, I'm sitting in the hotspot of the world right now in terms of COVID activities in Manhattan. So obviously I'm in quarantine over here. This is going to be what a lot of our communities are going to look like. But you do need to manage. We're not going to be shutting down the global economy for 3 years. My wife is a physician, so there's every reason to practice good, safe social distancing protocols to eliminate the surge of people coming into to the healthcare system. So by all means, continue doing that and wash your hands for God's sakes. But it's not like the economy can shut down for 3 years. So for people making decisions right now to temporarily delay things, thinking that the facts on the ground are going to improve over the course of the next 3 or 6 months are fooling themselves. You need to have safe operations with safe staffing levels, with a plan to operate this and to care for your employees who are going to be statistically inevitably impacted by the virus in one form or another. So we do have protocols in place to make sure that everybody is as safe as possible. But it's not like we're going to be temporarily shutting the things down, because temporary does not exist in this environment.
The new concession that you mentioned, is this being acquired from the government or out of default?
From the government. So this would be a new mining concession. Be kind of it's kind of like to the right of that globe, if you can see. So between that globe and the red line thereabouts.
And there's another question coming in. What is the Nicaragua tax royalty structure? Why would Nicaragua, now seeing the value, entice other companies to join the party, perhaps at higher tax royalty rates?
The current royalty and tax regime is 3% non-deductible to the government top line, effectively NSR. So that there are some production-oriented deductions, but it's not taxably deductible, and a 30% after-tax corporate income. They changed the code. So either in 2016 or 2017. It was reasonably recently. The question about, I guess there's two questions embedded in that about whether Nicaragua is interested in taking more control of the mining sector, and then and a corollary to that is about whether they want to increase the level of taxes on it. The government is Sandinista, so it's FSLN. Ortega, who is one of the key Sandinistas from the 1980s, has been running the country for over a dozen years at this point. He respects private ownership of businesses like gold mining and then even small businesses in the country itself. It is a key contributor to the government in that regard. Having said that, this virus situation is putting so much stress on governments around the world. And on top of this, you have this weird little oil war that's going on in the middle of it, where oil as part of the extractive industry is no longer profitable enough to tax. Luckily, Nicaragua doesn't really have that much of a hydrocarbon presence. I think it's entirely, it's certainly a risk that around the world, I don't think it's Nicaragua specifically, that in developing jurisdictions, developing countries that have extractive businesses will be looking at non-hydrocarbon areas of mining tax increases. We're guests in the country, so if there's going to be an increase in tax, we have to deal with it. Hopefully, that we have a good dialogue with the government, that if they do change the tax regime, that we have some influence on how it is changed, because there are ways of increasing taxes that I think are good for the country and how it develops, and I think there are ways of increasing taxes that are bad for the country. But look, I don't think we've seen government coffers being stressed like this since the Great Depression. So I think everybody on this call should be expecting taxes to go up in their regime. I don't care if it's in Nicaragua or Canada or anywhere.
Akiba, there's some more coming in, so I'm just going to lob them at you. One is from Grant Beasley, actually. Hi, Grant. Thanks for joining us. Before I ask the question, I'm actually going to say that if anyone's listening to the webinar and they want continuous updates on what's going on, Akiba's got a very active Twitter account and tends to post a lot of stuff. So I would suggest following him, and Grant as well does seem to post quite a bit about the name. So hugging you both there. You can't do anything about it because I've got control of the mic. But Grant's just asking when we expect the mill to arrive.
Right. So the mill is actually in Nicaragua. So it got stuck in Honduras for, frankly, it should have been at our site about almost 4 weeks ago, and it got stuck in Honduras. It was delivered there probably about a week after we thought it would be in the port of Cortez up in Honduras, and it was a confluence of events. To put it mildly, it was a shit show at the border. But we actually got the 2 mills and 9 ancillary loads on our side of the border. And then now that it's in Nicaragua, we're going through another bit of logistical snafu that we're trying to deal with. But our expectations is that this equipment will be delivered to site sometime over the course of the next week. So a little bit of And by the way, like we're actually pretty close to the border. I mean, it's kind of laughable how close our mill and our ancillary equipment actually is. It's about an hour drive from the mine, so it's a little bit frustrating to see that. So there are some local micro logistical screw ups that have happened over the course of the last couple weeks, but this was all exacerbated and primarily caused because of the pandemic, right? So border crossings are difficult. Luckily we kind of saw this coming, so we over ordered everything that we needed from a consumable perspective, really starting at the back end of January. So we're good and not really reliant on consumable deliveries probably for another 5 or 6 weeks. But this should be a lesson for investors and even operators in the space, that whatever you thought was going to be your schedule before, there has been a pretty big canister of molasses that has just been poured into the gears of the global logistics network. So whatever you thought your schedule was, it's going to be delayed. And I don't care if you're building a mine in Nicaragua, building one in, I don't want to pick on any particular country, building a mine in Wakanda to eliminate any specific names. All of them are going to be delayed because of what's going on with COVID.
It's a question just asking you about share price and why you think the share price isn't higher, given everything that's going on at the company level being so great.
We're in an industry where the normal junior mining company is tiny with respect to what a normal public company is normally. So it's not unusual to find mining companies that have single-digit million market caps in this space, which is crazy in terms of what you need to have from a public market infrastructure perspective. So in doing that, we tend to be a relatively illiquid industry, and in doing that, the participants within it do go through these. And I'm also an investor in the space, so I'm equally guilty. This is not me criticizing the people on the phone. I'm part of the same group that I'm criticizing right now. So we go through these levels of anchoring, and because the company was effectively mismanaged for so long, that you saw it trade down to a certain level, and then it wasn't because of my genius. It was really just because we stopped doing silly things, that the stock re-rated from 10 cents to over 40 cents. So it does take time for this whole anchoring thought process to kind of get eliminated from the name. Anytime that a stock quadruples, there are going to be investors that are hesitant to buy. But when you actually start taking a look at the facts on the ground in terms of what this mine means from a cash flow perspective, even on the startup of it, and then what the potential is from doubling of production, and then to eventually start to go for the big boy prize and prove that this is an orogenic gold mining district, the fundamentals of the valuation are far in excess of where we are, which is the reason why I was in the market buying stock. And if it continues to languish, then great. I'll have the ability to buy more. But it will take time for us to re-rate. Like obviously, we're going through a project build out with operational risk off the charts because of what's going on with the global pandemic. But eventually, this is going to turn into a mine with cash flow, and then the stock will re-rate accordingly.
The Spanish question was regarding open pit versus underground mining. And, Akiba, I'll let you answer it, but I think right now we're focused on open pit, and there's plenty of upside with underground, but that's for the outer years.
Yeah, that's right. Look, like for all the reasons why this deposit becomes good for an open pit. So you got like shallow dipping structures, high grades that you'd be able to get out with limited capex. Goes against you on the underground. So those shallow dipping structures, the number of ounces that you have per vertical meter go down. You're working against gravity. In terms of like key risks of the project, the geotechnicals here, so the rock competency, which is actually helpful to sometimes helpful, sometimes not so helpful on the open pit in terms of just kind of the crappy nature of the host rock itself, where we're effectively in this sedimentary hosted system. It's a schist. It's not like the volcanics that you see elsewhere in this, but you touch it, it's like playing around with shale. It's like it crumbles in your hands. So it makes mining cheaper, albeit you have to be cognizant of getting your pit walls to hold up. But all of that kind of works out against you in terms of an underground. There's going to be a lot of ground support that you need. The productivity levels go down. So Cedar's absolutely right, is that I would much rather find additional open pit mines over here than going underground. Having said that, the old timers and frankly not so old timers, there's artisanal underground mines in the area. It shows that it's feasible, but it's not our primary focus right now.
Thank you. And then I have a couple other questions here. They're all kind of macro, but what are you anticipating with the upcoming elections in 2021?
My take on, so there was a fair bit of political unrest in 2018, kind of while the Marlin Golden Rain merger was being negotiated, and it kind of blew up in the streets, and it was put down violently by the government and some of their supporters, and it left kind of a bad taste in everybody's mouth. It's been actually really calm over in the country since the end of the summer 2018. So there's really no protests in the street to any great extent anymore. Certainly no violent ones. But I think the government got scared. I think I'm not really a Nicaraguan political scientist, but I think it's highly likely, based on the political infrastructure in place, that there will be continuity in terms of the winning political party. I would be surprised if somebody other than FSLN wins over here. Probably Daniel will be the guy leading the charge in 2021, even though that's not fully set yet. He's kind of getting up there in age, so just from a personal health perspective, my guess is that that the next election, that'll probably be his last, and I'm sure there's some in the background machinations as to what the transition plan will look like after that, whether it's through a full term or if he decides to only be there for a partial term. But I don't view there as a foreseeable increase in political volatility in Nicaragua, more than what's been there for the last couple of years. Having said that, anytime that you have governments that are around the world that are being stressed, I do think that there's a heightened risk of political volatility everywhere around the world because of what's happening with the pandemic. But I don't think there's anything specific or special about Nicaragua in that regard. But that's coming from somebody who, again, is not a Nicaraguan political scientist specialist.
What is your short-term and long-term look for the price of gold, say for long-term 2 years out?
Oh, I started my career on the gold side in 2006. I was never a gold bug. I kind of like the industry just because of there was plenty of inefficiencies to exploit in it on the investor side. Starting about a year and a half ago, I've never been more bullish in my career for where the intermediate and long-term price of gold is going to be. And then in terms of what's happening with COVID and how it's actually going to change everything that we know about government and central bank financings or finances going forward and how they operate. I see all roads leading to gold, and really, this is the first time in my career that I can really envision a consistent and sustainable 3,000 plus gold environment in the not too distant future. I do think you're going to have to go through a bunch of short-term volatility just because there's a lot of financings that are being stressed. I do think there's this is the environment where you tend to have pretty major transitions into reserve currency status. So I do think we are in one of these multi-year transition points where King Dollar is going to go away, just like at the end of World War I, it was the pound that was going away. So it's going to be a multi-year process. But when we come out the other side, the world is going to look a hell of a lot different without having a dollar-based dominant system over there. And I just do not see a situation where that's not positive for gold relative to where it's trading at right now. I do believe that there is going to be a price where I don't believe any commodity goes to infinity. So I do think there's going to be some sort of equilibrium level, but that equilibrium will adjust higher and will adjust substantially higher, probably more than most market participants envision right now.
One last question, Akiba. It's an easy one. So do you actually take money from your own pocket and buy Mako stock?
I did. So I currently own 10.2, 10.3 million shares directly. All but 2.7 of that I purchased in one form or another, either on the screen or through this convoluted share purchase agreement that we had as part of the Marlin Golden Rain merger. But all of that was cash coming out of my pocket and buying a Mako. I've also been granted an additional 21 million options where the strike prices were on average about a little over 100% out of the money back when I took over as full-time CEO in August of last year. So I'm, in addition to the shares that I've purchased on the screen, I'm looking forward to having those option grants become very valuable over time as well. But yeah, the vast majority of those 10.2, 10.3 million shares that I own right now were cash coming out of my own pocket.
Okay, we've got a question on acquisitions. Are you planning on strictly organic growth, or do you have your sights set on potential acquisitions? They say within the country, but why don't we open it up a little bit wider?
Yeah, sure. Never let a crisis go to waste. It's kind of how we see it. I think there's a lot of opportunities that have developed, that will develop, and Mako is kind of in a unique situation in that at some point this calendar year, we're going to have an asset that can support itself. Right now, we're fortunate to have a shareholder that can kind of navigate it through some very challenging times, both operationally and then just through the broader financial markets right now. But at some point by the end of this year, which is, you can start counting the days and months, this will be a self-sufficient asset. And I do believe that that this new economic regime that we're in globally, because of or that was really pushed over the edge by the pandemic, there's some reasons why the economy was on tenuous footing before this. But in doing that, there will be opportunities that will develop over the course of the next few years, and we will be positioned, I think, better than most companies in our snack bracket than others. And really, it's only been in the last couple months where our investor antennae have been kind of sharpened over the course of since this crisis started to develop. Because before we didn't really see any attractive acquisition target relative to where Mako is trading versus some of our peer group or what we can plausibly buy on an asset base. That not only started to change a little bit, but also how we envision the environment changing over the course of the next 6 to 12 months. We are starting to get more laser focused on that. In terms of country or inside and out, we are a gold mining company, so any acquisitions that we look for will be in the gold mining space. I have no issues with Nicaragua. I think there's a lot of not so much operational synergies, but kind of like management synergies, relationship synergies that will be helpful. So if there's a great deposit in Nicaragua, sure, we could take a look at it. The truth of the matter is that the gold is where God put it. So you got to look kind of where the gold is rather than specifically where borders were placed. Within reason, I think our operating team right now our operating team is kind of stressed managing the global logistics chain right now. But even when things start calming down on that, we'll be stressed by managing multiple time zones. So anything within these time zones, as far north as you can go to as far south as you can go, are certainly within our vision and appetite for the intermediate and long term. So we'll never put restriction on acquisitions if a deal makes sense.
Is it legal in Nicaragua for you to hire armed guards when you determined it would be prudent?
Yeah, we have armed guards. Thanks.
I guess we'll wrap it there. Thank you very much, Akiba, for taking the time and for all the participants in Caesar. So appreciate your time. Stay safe, Akiba. Keep us updated.
All right, sounds good.
Okay. Bye.
Bye-bye.